So great to have you back on the show. I mean,
Morning.
we have the Treasury Secretary testifying today, but at least from a market standpoint, the key focus is again on the Fed chair, on Jay Powell, given the fact that he took such a hawkish tone, or what was perceived to be such a hawkish tone in a policy pivot in front of the Senate yesterday. I was reading Tim Dewey's Fed Watch, his latest note from there for SGH macro advisors, and one of the things he noted was that Powell's comments about expecting to discuss an accelerated tapering at the next meeting, that, quote, this is about as close to front-running the FOMC decision as Powell can get without outright saying the acceleration will happen. How do you see it?
Yeah, well, I basically agree with that. I was surprised. He was, by the standard of Fed chairs, he was very direct. In an absolute sense, it wasn't that direct in normal discourse. But when you think about how circumspect Fed chairs over the years have been about giving out any information of that nature, it was a modest departure, maybe more than a modest departure from norms.
Yeah, I mean, it did seem like the market was starting to price in this type of sentiment. And then, of course, we started to get the headlines the end of last week around this new COVID-19 variant, this Omicron variant. So what do you make of the timing of this pivot by Powell, given the fact that at the beginning of last week he was just renominated by President Biden, and then, of course, we do have this variant?
I'd be very surprised if it weren't the case that he, Jay Powell, checked this view out with a number of members of the FOMC. So he wasn't running out on a limb by himself. A few have been public about it, and that was clear. Many have not spoken about it at all. But I would guess that he made pretty sure that he had the committee behind him before he made a statement like that. Now, one big uncertainty, Steve Leisman mentioned this, I heard before, in the near-term outlook, is the Omicron variant. I think that at this point, that's the one thing, if it turns out to be worse than, I don't know what verb to use, we're guessing. I mean, it's all guesswork about Omicron at this point. But if it turns out, let's say, to be on the bad side of the range of guesses, that might deter the Fed from this taper. But if it's not, then I think it's they're going to go ahead with it. Powell would not have gone out that far on a limb if he wasn't pretty confident they were going ahead on it.
Yeah, and I realize there's still a lot of uncertainties and question marks around this new variant, but can we glean from the testimony we got yesterday from Powell that really the biggest concern, at least right now where Omicron is concerned at the Fed, is supply shock and the impact that could potentially have on prices?
No, I actually think, Steve mentioned this before also, I'm echoing Steve, that I think it's the demand side impact. If the Omicron turns out to be quite bad and actually kick the economy down the staircase a couple of notches, and that would come from people spending less if it happens, that would be what would deter the Fed. The Fed is seeing these supply shocks. They keep on coming and being more persistent, which was the theme of Powell's remarks. And that means that the inflation is going to last longer than the Fed was previously saying. But that's kind of baked in the cake. There can always be a big surprise in that. Who knows what might happen? But it would be a big surprise.
Alan, how are we supposed to be processing these short-term declines in prices on Baltic Dry, on oil, on gas, on nat gas, on industrial prices, on the prices paid? We just got ISM. I mean, are those easily reversed? Or is there a creeping sense that inflation, for whatever reason, is peaking?
I think there's a creeping sense that GDP growth is peaking. Those are all very, I didn't quite memorize your whole list, but those sounded like the kinds of things that are quite sensitive to the near-term outlook for world economic growth, not just U.S. economic growth. And when you talk about commodities like that, it's very important not just to have a U.S.-centric view. We are the 800-pound gorilla on the block, but there are a bunch of 300, 200, 100-pound gorillas on the block also, and they matter for world demand. So if you think that this turn in the disease is going to have a deleterious effect on world output, that's the kind of thing that moves commodity prices downward.